Hello everyone, my name is Mr. J.M. Kimani, your lecturer in management accounting. Welcome to lesson 2 of cost bookkeeping. This is a continuation of lesson 1. As you can remember and recall that I discussed the whole of this diagram, which is a diagram showing the cost information, the flow of cost information. And having explained the flow from which account, which do debit, which do credit, then we can now try a question. We can try December 2014, question 3, part B. December 2014, sorry, question 3, part B. The question reads that the following balances were provided in the cost ledger of GDR Limited, a manufacturing company, as at 1st of April 2013. There is debit and credit amounts in shillings. Stores ledger control account, shillings 250,000 on the debit. Finished goods control account, shillings 350,000 on the debit. Work in progress control account, 120,000 on the debit. Then cost ledger control account, 720,000 on the credit, totaling both 720,000. The following transactions took place during the year ended that 1st of March 2014. Wages paid, shillings 400,000. Direct wages charged to production, 250,000. Indirect wages charged to production, 100,000. Wages paid to office staff, 50,000. Materials purchased, shillings 500,000. Materials issued to production, shillings 350,000. Materials issued for repairs, shillings 100,000. Materials returned to vendor, shillings 50,000. Materials returned to stores for production, 60,000. Then materials lost in a fire, 80,000. Production expenses, 200,000. Production overheads recovered, 350,000. Administrative expenses, 110,000. Administrative overheads absorbed, 162,000. Goods finished during the year, 700,000. Selling and distribution expenses, 180,000. Selling and distribution cost absorbed in the cost of sales, 200,000. Then finished goods sold, 600,000. Then sales, 1 million. Required, Roman 1, prepare necessary accounts in the cost ledger. And 2, a trial balance as at that 1st of March 2014. End of question. Now, this question will enable us utilize the whole of this diagram. So with the flow of information. Now, let's have these accounts. We are going to open all the accounts as they appear, so that at least you can see the flow. So starting with the general. So ledger, account. This should be a big account because it is going to handle all those transactions. Then we have the materials. Let's have here stores. Ledger, account. Ledger. Then you have the wages. So ledger, of course, these are control accounts. We have, in this case, we have been given the overheads in their respective titles. So we're going to have here the production, overhead or expenses, account. We do have the admin. overheads or expenses account. Then you're going to open the other accounts, like I can open here the selling and distribution, overhead or expenses account. So I've reached up to this. So we still have the work in progress, the finished goods, the cost of sales, and the rest. So I want to erase this because now you have observed, you have seen exactly what we'll be doing. So we are going to be looking at it physically here, but practical here, that is. And then so I may want to erase to get enough space. So after these specific accounts, we do have now the work in progress. This is work in progress ledger account. So let it be a big one. Then from there you have the finished goods and the likes. So let me just indicate here. So this is, we have the rest, like now the finished goods ledger account. From finished, we go to the costs of sales ledger account. Then you have cost P&L, ledger account, and we have sales finally, sales ledger account. So to start with, we begin with the balances. We do have a trial balance at the beginning. So we have been told there is a stores ledger control. So we just go to the stores. So our stores is here. This is a debit balance, as you can see. So this is balance brought forward. This is 250,000. They have we have finished goods. Finished goods is here. Opening balance 350,000. So balance brought forward 350,000. Then there is the work in progress is here. So you have balance brought forward. This is 120,000. Then there is now in the cost ledger control, general ledger, that is. So which is on the credit balance. So we have this, we can have balance brought forward 720,000. So you see, now to start with, our accounts have balanced. So therefore we should make sure that at the end should balance. So now the first transaction is wages paid. This paid, remember, we were supposed to debit the specific account, which is the wages ledger. So instead of in accounting, we would have credited the bank. But now we are going to credit the general ledger. You can say here, general ledger. This is 400,000. So this is the amount of wages. So general, this is 400,000. Then you come and record here direct. We have wages paid, 400,000. That's what you have. Then we have direct wages charged to production. This charge to production, remember, is the work in progress account. So we'll have here in the wages, we charge here. So this is WIP. So this is 250,000. We transfer so to this one. So this is wages charged. This is 250,000. to 50,000. We make sure that we do double entry. We do a complete double entry to ensure that don't make any mistake. Indirect wages charged to production. We have, now this is indirect wages charged to production. Now, these indirect wages should actually meet the other expenses on production because it's not direct. It cannot go to the work in progress direct. It has to go to the production overheads, which is here. So we're going to transfer here. This is the production overheads. This is 100,000. So we transfer here. We have the indirect wages is 100,000. That's what you have, double entry. Then wages paid to office staff. This office staff, of course, is administration. We just need to transfer to the admin here. So you can have here admin overheads. This is 50,000. We transfer here direct. This is wages. So wages. This is office. Is 50,000. That's what you have as much as we have recorded everything. Materials purchased. So material purchased, instead of debiting the materials as we need to do here, and then we credit the bank, we credit now the general ledger. We can have here general ledger. The amount is 500,000. So we come and have here materials purchased. 500,000 material purchased. That's double entry. Material issued to production. So we come here, we issue to the production. Production is the work in progress. So we come and record here WIP. We have issued materials production 350,000. We come to the work in progress. We have the materials issued 350,000. Issued 350,000. Then we have material issued for repairs. For repairs, this is not direct materials but indirect materials which should go to the production. So you come and have here production overheads. This is 100,000. We transfer here. This is material for repair. Material repairs. This is 100,000. Then materials returned to vendor. This should have been opposite, like we transfer this back to the creditor, but now you don't have creditor, we have what? General ledger. We put here, this is general ledger. This is 50,000. So we transfer here. This is material returns. This is 50,000. Material returns, 50,000. Materials returned to the store for production. If materials are returned to the store, that means they just need to remain in this account because we don't have any in a stock account. This is going to be our stock account. So whatever is not going to remain here has already been transferred. So this will not be transferred, will remain in that account. Then we have materials lost in a fire. So we have material loss here. So this is an expense, of course. We transfer to the expense, the P&L. So you can have here P&L. This is loss, 80,000. So you can have here on the P&L, we have material loss, 80,000. 80,000. Then we have production expenses. This is what has been spent. Double entry, we should have debited the production account or the production overhead account. We credit the bank, but we are going to credit what? The ledger. So you can have here, this is general ledger. This is an amount of 200,000. So you come and have here